Welcome to the prototype version and demonstration of my live trade solution for live traders. This is a working example of the code executing into a member folder when I want to try to basically show you how this works and how this can provide multiple opportunities throughout the day, week, month, and year for active traders. Let me get started with this so I can show you how it's going to work, and I can show you how this operates from a standpoint of trading advantage and benefit. So we're looking at the home page here first. We have these buttons across the top of the screen. These are going to allow you to enter into the selected groups of symbols. We have 3x ETFs, foreign ETFs, NASDAQ 100, and futures. Likely the NASDAQ 100 will end up being the top 50 or 60 NASDAQ symbols that are traded through volume and activity on an ongoing basis, meaning I'm not going to try to support thousands upon thousands of symbols. I am going to provide a good group of symbols for traders, but there's literally, hundreds of opportunities every month with these strategies. As we move through, you can see I've created a series of help pages, which gives you the ability to go ahead and take a look at different features and functions. You also have the ability to see the trigger signals and image markers that are used by the system to present visible and visual opportunities for each trader. They're very clear, very simple, very organized. And what we're going to do right now is we'll take a look at the two separate modeling systems. LiveTrades consists of two separate algorithmic price modeling systems. The first is called the standard model, which is a trading system. It is not designed to hold trades perpetually. It is designed to get in and get out and try to find the best opportunity and the best timing for the trades. The rotational model is an always-in system. So as you can see here with Cure, the other thing I should mention is that all trades are listed as newest on the top. You see this little blue icon here and here. This is the newest trade. In this particular case, this says that we exited. This is an exit trigger on 5-9 because it's a flat neutral trigger. This is an exit trigger on 5-8. In this model, the system gets long or gets short and then gets out with a flat neutral trigger. In the rotational model, the system is always in a trade. Always long, always short, depending on whatever the modeling system determines is the trend. As you can see, some of the trends, if they start out recently, like this one, started out just yesterday, today actually, we have a minus 0.79% return on this trade. No big deal. It's a brand new trade. That can happen. This trade started about a week and a half ago, and this trade's already got a 16% profit on the trade. And come down here on MyDo, started out just a little bit ago, and it's got almost a 1.5%. Nugget here, short, has got a 1%, and it's just yesterday. Here's retail from about 5-6 days ago, and has already got almost 10% profit on the trade. Now remember, this is rotational. Because the rotational model is always in a trade, the rotational model can fluctuate greatly as volatility and price rotation increases. You can see we're tracking 32 symbols, and we have a total of 227% return on investment of all of the symbols totaled up. This averages out to a net return of 7.11% as of right now. Not bad for a simple rotational model. If you had all the money in the world and could trade this every trigger that's executed, right now your net return accumulated would be 227%. Now let's go back to the standard model so you can see how this works. Well, before we do that, let's go ahead and show you how the triggers actually work. When a trigger is generated, so here in Cure we have a new trigger. It is a long trigger highlighted in green. It was triggered on 5/14, May 14. The price level is 45.76, and the last price was 44.73 up here. You can tell it's a new trigger. You can tell it's bullish trending, and you can tell this is basically telling us that we're getting a breakout or potential breakout to the upside. If I take a look at the View Details report, this is the English language report for Cure, generated by the algorithmic trading system. You can see that volatility is normal, trend is long bullish, price price appears to be accelerating upward. Be prepared for upward price moves and look for exit targets in the near future. You can see that we are holding a negative position here right now. The trade was 514 is what it's stating here, and that was just a couple of days ago right here. And you can see essentially that what we're looking at is we're looking at the opportunity for this trade to mature over time and progress forward. Now, as we move back to the standard model, you'll notice that Cure just got out of a trade on 5.8 on the standard model. So what's the difference? Again, the rotational model is always in, always long or always short, and the standard model is more of a trading system. This basically, the standard model trades once or twice a month, typically on average, on this end of day data. So now you can see we have a new trigger. We exited the trade on 5.8. Volatility is normal. Trend is flat neutral. So it's telling us we really don't have anything going on here. If I view the details of this to see what the last trade was, I can come in here and I can see again the report that is being generated by the algorithm, but I can also see the last trades. So the last trade was entered on 5.4 and exited on 5.8 for a total of 2.71% profit. The trade before that was entered on 3.23, exited on 4.2 for a 1.11% profit. And the trade before that, a short again, was entered on February 7th, exited on February 12th for a 4.24% profit. So you can see the trades as they're accruing. Now remember, these trading systems are not designed to be the end-all, be-all trading system. Okay, there's sometimes these systems are going to, through rotation and through volatility, they could take 6, 8, 10% losses as it's rotating. So traders need to be aware and need to learn how to use this efficiently. Let's go ahead and take a look at this FAS trade. It's 10%, or May 10th was the entry. It's minus 2.37% right now. Entry was 69.51. Current price is 67.86. It looks like it is a new trigger. It is a bullish trend, and it is telling us that price is trading sideways within a range. Take a look at the details. There's the price details for the FAS trade. You can see the last trades that were generated from March 26th to April 2nd, 6.71%. From February 7th to February 8th, 10.92%. And from January 8th to January 10th, 2 days, 2.4%. You can see, like I said, it's not always going to be fantastic. This is an algorithmic trading system, and if you know anything about algorithmic trading systems, there can be periods of time where losses can accrue, just like with any trading. This is a service designed for traders that are smart enough and skilled enough to know what to do and how to trade efficiently. You can see the trades are highlighted very clearly. Green for bullish. See if there's a short trigger. I don't see. There's a short trigger. UTSL 2.1%. Let's go ahead and take a look at the short trigger. Again, this is telling us it is a new trigger. It's telling us it's bearish. It's telling us that it's in standard range, standard pricing range, and it's trading sideways. So we take a look here at UTSL. UTSL, here's an example of a series of losers. So this is an example here of basically, even though it's telling us it's short, the last couple of trades haven't been fantastic. So if you're going to try to take this trade, looking at this rotation here, knowing that, you know, there's probably a pretty good chance that you're going to get a 10 to 20% price rotation on this 3X ETF, you probably want to consider trading it with maybe a quarter position or a half position or maybe a smaller amount of equity. So again, the reason these last 3 trades are shown to you is to show you how the system is performing recently and how well it's doing. We go back and take a look at some of the other triggers. Let's take a look here. DFEN, I know, just got into a great trade. So look at this, 9.6%, 6.2, and there's an earlier trade, minus 20. That gives you an idea of how this rotation can kill you. Let's take a look here at UPRO. 3.4, 12.8, and 4.3. The idea again is this is a service that costs about $1 a day per trading day for you to have access to close to 250 different trading symbols with two algorithmic price modeling systems that are proprietary and will continue to be improved as I can improve them, and gives you access to both a standard modeling system and a rotational modeling system. Again, the standard modeling system, because of the way it works, because it trades in and out of trades and sets flat at 60 or 70% of the time, can oftentimes be showing negative numbers because it just got out of a couple of really good trades, and the current trades are maybe sitting in a net neutral or net flat position, meaning they're not making a lot of money yet. As they mature, they may end up turning into profits. The rotational modeling system is always in. So the rotational modeling system is always going to be trying to grab a price trend from every symbol that it's tracking. This particular foreign ETF result is showing that we have 12 symbols we're following so far, 77% net returns, average return of 6.48% per symbol. Now again, you may not choose to follow the system exactly the way it's operating at 100% equity each time, but you have the ability to pay attention to this and to determine whether or not it's useful or not. You can see here the EDZ symbol is short, it's a new trigger, it's bearish trending, and it's breaking out to the downside. Let's see on the chart if that's actually the case. Breaking out down here with a gap, rotated back higher, we'll see how it plays out. Let's come back to the other EURL. It's telling us again, it's a new trigger, it's bullish, and it's range based. New trigger, bullish, and it's range based, telling us pretty clearly what's going on. JPNL is telling us that it's a new trigger, it's bullish, and it's range base again. Let's see. New trigger, bullish, and ranged base. Again, the trigger occurred on 5/14, and the trigger details are telling us right here what we should be doing. So the idea again is LiveTrades is a very suitable solution for traders to be able to find triggers, execute triggers, and use these triggers with their own skill and understanding and knowledge to be able to profit from them. Find your own profit targets, use your own stops, execute your own trading solutions using these triggers, or decide to ignore them if they don't suit your style. But the idea here is for a very inexpensive, roughly $1 a day, to have access to all of these. You can have access to hundreds of triggers, really thousands of trade triggers and rotational price modeling systems every day of the week. It's just a matter of waiting for the markets to do what they're going to do. And we all know the markets will move and they will give us great opportunities. You use this as a resource. Call it an index of trades. From that index of trades, you do what you want. That is my goal, to be able to build and expand this system to include more advanced and more diverse algorithms for my traders and my customers to be able to benefit from. Let me know what you think. Again, thank you for your time today.